Alright, it's time now to get in a quick check on the market technical. Sahil Kapoor of Edelweiss joins in. Hi Sahil, afternoon. First, your thoughts on the Nifty. It's staying steady, but the mid-caps have come off a bit from the highs. How are you reading the market texture?
Yes, last week we discussed that 8330 to 8350 is a very important range for the index, and it has been able to break that level. So I think right now the rally should stretch towards 8600 to 8650 in the short term. Anything closer to 8330, 8350 on Nifty should be bought. So I think it's a buy on a dip market, and most likely you will see a trend moving higher. I think the most important thing right now is that the end of 2014 and beginning of 2015 started with stronger dollar and a weaker oil picture, and then it reversed where you had weaker dollar and stronger oil. I think right now yesterday's move and last 5 days move clearly indicates that oil may be topping out and you might see a stronger dollar going ahead. I think that rubs off with strongly with consumer cyclical indices like Nifty and Nikkei. So I think there is a clear inter-market linkage that is appearing, which is positive for the market.
All right. Hi Sahil, good afternoon. Thanks for joining in. You said it's a buy on a dip market. Perhaps that's the reason why you've laid out a couple of buy recommendations for us. But coming to your first recommendation, Amara Raja, that stock's been flat for the year, just gained about 10% from the start of this year, flat for this week rather. So any rationale for that?
Yes, if you look at Amara Raja, last 5 months, it's been absolutely in a range. It's forming a pattern which is flat pattern. Generally, stocks which outperform index significantly, generally when they go into consolidation, they generally carry that consolidation forward in terms of a range. So I think this range has already given 5 legs. So generally corrections either happen in 5 legs or in 7 legs. So we believe that this correction is largely over, and current level is an excellent entry point with a stop loss below 780. I think a 1,000 rupee target is likely on Amara Raja.
Okay, your next recommendation is a buy call on Yes Bank.
Yes Bank, if you look at, it's been outperforming most of the banks on the bank Nifty as well. There is a clear rectangle pattern. Rectangle patterns are very rare on charts. If you look at a very large number of price bottoms in Indian indices, in early part of 2008 and 9 were formed through rectangles, and this is a pattern which rarely fails. A breakout of 860, 865 range, I think Yes Bank is headed to 1,000 rupees. So it's a purely pattern-based trading setup on Yes Bank. Stop loss below 800 to 790 should suffice, and it should head towards 1,000 rupees.
All right. Sahil, metals have been under pressure today. In fact, the CNX metal index is down about 3/4% as well. So what do the charts look like for metal stocks?
I think the resurgence in metals that we saw about 15 days to a month ago, it was largely reflecting the fact that a lot of base metals internationally were moving higher, and that, as I said earlier, was a reflection of a weaker dollar. Yesterday the dollar was up about 2%, and ECB said that they will not let the yields go higher by front-loading the QE. I think it's an indication which the other market is giving that metals may not have a lot of strength on the upside. So this rebound in metals, I think, will halt here. Possibly most of the metal stocks will continue to move in this range of 5% in the current series.
Any disclosure, Sahil?
The stocks that I mentioned today, we are advising these stocks to our clients, and they may have these positions.
Thanks so much for joining in. By the way, Bharat Forge is now down closer to 4.5%.